enlightenment on digital securities, which we believe is crucial at the point in time that we are in the Nigerian capital market. This is the first series, and this series is themed anticipating digital securities in the Nigerian capital market. And so I'll just take time quickly to introduce the host, the moderator, the keynote speaker, and our panel. I'd like to introduce Mr. Bola Jamale. He's the Managing Director of NESD PLC. Okay. Mr. Damola Akindolire is our moderator. Good morning, Damola. Good morning. Keith Bear is going to be delivering the keynote presentation for today. Hi, Keith. Good afternoon.
Hi, good to meet you.
Yes, and I'm sure we all know Mr. Abbas, who is a commissioner from the Securities and Exchange Commission. Good afternoon, Mr. Abbas. Thank you for joining us this afternoon. Yes, good afternoon. Just occurred to me, I didn't introduce myself. My name is Zaina Babalola. I head the Legal and Compliance Department of NESD. So as we begin the session, I'd just like to mention just a couple of house rules. I'd just like to mention if we have any comments during the course of the session, please include that in the comment section. There's a comment section. But if we have questions, all our Q&As should please go into the Q&A box, which I'm sure we can all see, so that at the end of the event, we can streamline all the questions and know they're in one place. So please, if you have any questions, put them in the Q&A box, not in the comment section, so that we can easily streamline them. Thank you very much. On this note, I'll be handing over to Mr. Jamale to deliver the welcome note. Thank you.
Very welcome, everyone, and it's an honor here to have more and more members joining, as we can see. We're seeing the numbers going up as we're here. We believe that technology is growing at an extremely rapid pace and accelerating as it is, and affects all aspects of life, no less the capital market. So our financial institutions in this part of the world have been very quick to innovate and just take advantage of technology to build even more efficient services and products. So we see it playing a pivotal role, especially blockchain as it's coming into play. We're seeing it in other parts of the world, and it's only a matter of time before it becomes a major driver in our capital markets in Nigeria. But one thing that we need more than anything else is the enlightenment, the knowledge, and the ability to use it properly and also anticipate, in fact, even grow what technology can do for our world. So we have decided to run a series, an enlightenment series, we call it, and this is the very first session. This session is being run in collaboration with the CISI UK, and I'm very excited to have Keith Bear join us. He will, I cannot go through his whole profile well enough, so he's going to introduce himself to us. And I'm also quite honored to have the Director of Exchanges from the SEC, Mr. Abbas, to join us and give us his own thoughts on where we're going as a world with technology. So I will not say much more. I think I have the most boring things to say here. I will hand over to Keith. Keith, you're very welcome, and we are meeting with the capital markets in Nigeria. Very welcome, Keith.
Thank you, Bola, and thank you very much for the introduction, and thank you very much for the invitation to speak. I'm very honored in that. So let me introduce myself quickly. Keith Bear. I spent many years working at IBM. I was leading the financial markets industry at IBM. So working with a lot of financial market infrastructure providers, sell side and buy side as well. And in the last few years, sort of 2017 to 2018, spent a lot of time working on blockchain within the FMI world with London Stock Exchange Group, for instance, CLS and the DTCC. I was then appointed a fellow at the Centre for Alternative Finance, which is part of the University of Cambridge in the Business School, where we have a major research program running at the moment. We are sponsored by 16 public and private institutions, including Goldman Sachs, Fidelity, MasterCard, Visa, and others on the private side, and on the public side, the World Bank, IMF, the BIS Innovation Hub, and others. Besides that, I also work quite a bit in the fintech community. So I'm on the advisory board and the director for a number of fintechs. I mentor with Techstars. I'm on the Bank of England's Central Bank Digital Currency Technology Forum. And I'm also sit on the consultative working group at ESMA, the European Securities Market Authority, for financial innovation. And just talked very recently in terms of the ESG consequences of crypto assets as part of that just last week. So let me, with no further ado, I'm hoping that everybody can see my screen. What I'll spend the next 30 minutes or so talking about is observations on what's going on within the capital markets in terms of the development and the deployment of blockchain-based applications. So let me kick off with why is blockchain, in my belief, so transformational as far as capital markets is concerned. At the simplest level, I don't mean to simplify too much in terms of the world of exchanges, but essentially there is a share purchaser and a share seller, and there's a transaction that takes place between them. But of course, the reality is quite different. There are many, many third parties in terms of the custodians, the transfer agents, the CSDs, the clearinghouses, both sides of the transaction, etc. So many third parties, many intermediaries, and obviously everybody takes their rent for the part of the transaction that they're supporting, and that equates to cost, to friction, etc. within the whole of the environment. And the same is true, obviously, in multiple other industries. So what the promise of blockchain-based technology is indicated in this diagram, courtesy of R3. Before the internet, these participants within the ecosystem operated as independent entities. With the internet, obviously, there was a common means of communication between them, as you can see in the middle diagram. But essentially, the novelty with blockchain is to be able to see a common view of the truth. So basically, the confidence between different participants that what I see is the same as what you see. And that obviously makes a significant difference in terms of the potential to be able to reduce cost, because I no longer need to keep separate records. I can believe that the records I have are the same as the records you have, and therefore significant savings can be gained as far as the overall reconciliation costs, etc. And this is kind of typified in this diagram. Kind of top left and bottom left give an indication of before and after in terms of what blockchain potentially does between participants in a network, which obviously could be participants, members of an exchange. And on the right-hand side, some of the estimates that the industry came up with a few years ago in terms of what the potential savings were. So in the case of cash securities, for instance, this was an early estimate from Goldman Sachs of around $11 to $12 billion globally as a result of the potential impact of blockchain on the securities market. And in other areas, as you can see on the bottom right, some of the savings quantified in this case by Accenture for savings in areas of financial reporting, business operations, etc. So the cost saving potential is a key driver for all of this. If I move on to the next slide. So this is a much more recent survey that came out just in January of this year, looking at participants from a geographical point of view. And my apologies, it doesn't give a breakdown for Africa as part of this, but also across different types of businesses. And as you can see, something like 69% of the respondents to the survey, which was conducted by Greenwich, you may be familiar with them from an analyst point of view, 69% of respondents were planning to implement blockchain for capital markets, and 45% of those were very focused or extremely focused on such a deployment. So, just based on the survey, and this is one of many, blockchain is very much making a significant impact as far as capital markets is concerned. So in terms of exactly what impact it's having, one of the key parameters obviously is around cost reduction, as I mentioned before, and how is that being achieved? So this is a survey that came from State Street's Digital Assets Unit, newly formed last year, and they're giving us an indication that something like 52% of the respondents they talked to believe there will be a complete overhaul of using distributed ledger technology, blockchain technology, to enable real-time settlement. And obviously moving from a T+2, for example, to a real-time environment has significant consequences, both in terms of being able to reduce to near zero settlement risk, being able to remove the need for a CCP, etc. 31% of the respondents said there would be significant improvement to enable real-time settlement enabled through blockchain. So significant belief that real-time settlement is coming is a question of time. Obviously, market conventions mean this will be more of a slow progress. In the US, obviously, the current move is from T+2 to T+1, but even the DTCC, through the initiatives they have with ION, etc., is giving an indication in terms of where the direction of travel is going to be as we move into that direction. And I'll talk about an example of this within the FMI world a little later. The other major dimension, obviously, is actually tokenizing, digitizing securities onto a blockchain, as opposed to the infrastructure in which the FMI is operating. So in this case, something like 77%, again, from the same survey from January, believe that securities will be digitized and settled, and also settled on a blockchain in the next 5 to 10 years. Europe is probably pretty advanced, as you can see, in terms of the 89% who believe that's the case. And in terms of business types, the buy side, obviously, interestingly, is a big believer in this and what the potential benefit will be, together with FMIs and technology companies, obviously, playing a major role as well. So move on to the next slide. But really, besides a blockchain being able to provide real-time settlement, being able to provide tokenized securities, the potential is obviously much greater than that. So this gives an illustration of the bigger picture if we zoom out a little bit. So asset classes that are traded on exchanges at the moment, be they warrants, corporate equity, corporate bonds, as I said before, the potential is really around cost efficiency for the reasons I touched on. But the potential is broader than that in terms of being able to provide new asset classes on exchanges, such as real estate. So basically tokenizing real estate, and I'll come on to that a little later, being able to give the means of providing a more liquid, granular market, bigger investor reach, etc. Similarly with art and obviously cryptocurrencies, where we already in the crypto world have centralized exchanges like Coinbase, and we have decentralized exchanges like Uniswap. So whether you are a believer or not in terms of the cryptocurrency world, it's arguable, I think, that the traditional financial markets, TradFi, we might call them, and the DeFi and the crypto world will intermingle to a greater extent over time. I haven't got time to get into that, but I think that's a particularly interesting topic. And in terms of what it means for markets, obviously, the potential is to be able to create and mobilize new assets in a more granular market, and potentially to enable new business models as well. And then just to complete the picture, there may be capabilities, assets that can be facilitated through blockchain that don't regularly go through an exchange environment, such as trade finance, also trade finance receivables, syndicated lending, etc. And there are multiple blockchain networks operating, for example, Contour in the case of trade finance, that are facilitating taking out friction, being able to reduce cost and increase the ability in terms of global trade, for instance, very important in the current environment, as a result of being able to digitize the whole of the market in that respect. So I've been talking about tokenized assets, just to put a little more context on that. On the right-hand side, as you can see, that we've tried to compare and contrast the difference between physical assets, stocks, bonds, whatever it may be. Obviously, the registration processes that you're familiar with, the securitization processes that might exist. In a tokenized world, we're talking about something that exists on the blockchain. The token represents the digital ownership of that asset, the rights that are given as a result of ownership of that asset, and the ability, therefore, to provide fast and free, potentially, transfer of ownership in that respect, and having an immutable record that's kept on the ledger in terms of who owns what and how that transfer of ownership happens. By virtue of doing that, as I've touched on, fractional ownership can be provided. I'll give an example of that a little later. Liquidity of markets can be increased. The investor reach can be increased. Business processes such as asset servicing, and I'll touch on that a little later, can be automated and cost reduced, and other key benefits coming. What assets are being tokenized? Again, from the survey I mentioned on the bottom right, investment funds are seeing a lot of this. An example of that is happening in Europe at the moment in terms of fund admin chain, for instance, followed by real estate, large illiquid assets that tokenization increases market liquidity, equities, VC and private equity, which I'll come on to a little later as well, fixed income, and then art, collectibles, and commodities at the seventh listed priority item. So there's significant transformation happening. It's probably slow and steady in the TradFi world, fast and accelerated in the DeFi and crypto asset world, but I think both are learning from each other in many respects at the moment. Sorry, going backwards. So from an investor point of view, what are the benefits of tokenization? I'd mentioned the kind of headlines in this. This is another survey from State Street Digital. And as you can see, from an investor perspective, increased transparency, because everything is visible on the blockchain. That is a significant benefit from an investor point of view. Being able to manage risk more effectively, in particular, I guess, reduction of settlement risk, as I touched on before, and increased liquidity. The three highest reasons from an investor point of view as to why tokenization is a force for good as far as this is concerned, but also giving potentially greater access to private markets to retail investors as private market assets, be they corporate debt or PE, VC, etc., becomes available to a broader set of investors in that respect. And this is generating significant investor interest. So again, from that survey, 71% of the population surveyed were interested in investing digital asset securities. As you can see, North America being a lead in that respect. Significant interest from both the FMI world and also from technology companies, as you can see, but also from the buy side as well. So this is beginning to get more and more interest, and in many respects, momentum is building, as I'll touch on a little later. So I wanted to, having laid the landscape to a certain extent, I wanted to give some specific examples, of which I think I have 4 in total, of what's happening today that supports the hypothesis I just talked through. So the first of those is SDX. This is the Swiss digital exchange, part of SIX, the Swiss national exchange. So I borrowed a couple of their slides because they have basically created a new digital exchange in support of digital assets. So rather than modify or extend the existing exchange, they basically have created a new exchange, which obviously can piggyback on what SIX does in terms of clients being able to work within the auspices of the Swiss regulator and the Swiss National Bank, for instance. But essentially, its model and modus operandi on that 4x4 is in the bottom right, as you can see, being able to provide a regulated digital model for tokenized assets on a distributed ledger in an exchange model, positioning themselves between the traditional exchange model on the bottom left of that 4x4, or 2x2, sorry, and the new exchanges such as Binance and Coinbase in the crypto world on the top right. So this has been a journey for SDX for a couple, 2-3 years at least. They succeeded in getting their regulatory approvals last year. They're a key part of some of the work going on with both BIS and the Swiss National Bank in terms of tokenizing fiat. So the Project Helvetia initiative, for instance, there was a collaboration between SDX, the Swiss National Bank, and BIS in Basel. So a lot of interesting development, but the interesting thing in particular is that they're now live. So their first issuance was a hybrid bond that was issued in production with the help of Credit Suisse, UBS, and Zurich Cantonal Bank. Interesting as it was a dual part bond. So it had part A, which was a digital part, which was completely managed by SDX, the digital exchange. And then a traditional part, which was managed by SIX, the traditional exchange itself. Different ISINs, but the same legal concept, the same perspectives, the same attributes. And as you can see, exchangeability between the digital bond and the conventional bond that was issued. And what was interesting is that there was more investor interest, I'm told, on the digital bond than there was on the traditional bond in that respect. And I don't think I've got the slide on the detail here, but the SIX exchange, basically everything after execution resides on a blockchain. It's basically, therefore, with atomic settlement, basically the cash leg of transactions are tokenized through commercial bank money facilitated through the banks that the exchange are working with. And the securities leg is tokenized as well. Atomic settlement, real-time settlement. As a result of that, no need for a CCP, as I've mentioned. And because all of this resides on the blockchain, there is also automated asset servicing that is provided through the blockchain as well, not requiring that function from custodians. And a CSD that is also on the blockchain as well to facilitate digital ownership through the token as facilitated by the CSD itself. So very interesting in terms of a production regulated digital asset exchange, one of the first globally, I think, though obviously there are many others that are following, such as TDX, the Thai digital exchange, part of the Stock Exchange of Thailand, etc. On the wholesale side, Finality, you may have seen this in the news just a few days ago, are providing a universal settlement coin. In a sense, it's a synthetic central bank digital currency. Euroclear has just joined or invested in Finality together with the existing banks that are listed there, Santander, Boni, Barclays, UBS and others, and NASDAQ on the exchange side. And essentially this is tokenizing the cash leg of transactions, starting off with sterling, US dollar and euro, therefore working collaboratively with the Fed, ECB and the Bank of England. And they just have a testnet operating, which completed its first test transaction, working with Santander and NatWest as the investor and the issuer as far as a transaction. Interestingly, the security was on the Ethereum blockchain and the cash leg of the transaction through the technology that Finality use, which is Adara. So that's an interesting example, and they plan to go into production, probably in the limited sense, in October of this year. So that, again, quite significant in terms of the impact in the world of FMIs. I mentioned tokenization. This is an example from Northern Trust, who partnered with Bond Value in Singapore, basically to tokenize bonds with this express view of being able to, as you can see from Justin's quote, to allow a wider group of investors, because of the ticket price associated with fractionalization, to have access to investments that previously only larger institutions would have access to. So something that is a great example, I think, in practice of how in a regulated market, tokenization is having a significant impact, increasing market liquidity, increasing investor reach, etc. And the last example I just wanted to talk about was, I mentioned before, private equity and venture capital. Just to give a couple of examples of what's happening globally in that respect. Tokeny on the left is a Luxembourg-based platform which provides tokenization software, and one of their key focuses is on being able to automate tokenized private equity in that respect. And on the right-hand side, very interestingly, more recently, a consortium has been launched looking at alternative investments more broadly, not just in the P and VC side, with very big names involved, including Apollo, BlackRock, Blackstone, Boni, Carlyle, KKR, Morgan Stanley, etc. So it's a very impressive list of names, which again gives an indication of the how a lot of this will be driven by some of the big names in the industry, realizing what the benefits are going to be in terms of tokenization. So just to finish off and hopefully give a segue into the next speaker from the SEC, just some closing comments on regulation. We published a survey from our research center back in 2019, so the information is a little dated. It doesn't cover the developments over the last couple of years. But at that time, we surveyed, I think, around between 20 and 30 regulatory regimes for digital assets. And what we found was it kind of broke down into 4 different approaches that were being taken. Either that digital assets and crypto assets may be viewed under existing regulation, existing laws and regulations can cover crypto assets. Those institutions that launched a bespoke regulatory regime, such as Mexico here. Those which focused on retrofitting regulation, so taking existing regulation and retrofitting it to be able to account for crypto and digital asset activities. And those that are launching new bespoke regulation, I think the flag here is Estonia, if I remember correctly, that were an example of that. We also found that those jurisdictions which had a high degree of crypto asset activity specifically also were more likely to take the bespoke regulatory route, such as Malta, for instance, with their virtual asset activities regulation. And then on the right-hand side, we just gave some illustrations from some of the major regulators in terms of the things like the definition that they have for tokens, to what extent they classify tokens, be they utility tokens, asset tokens, virtual tokens. The nomenclature varies quite a bit, and it's hopefully with the work from the FSB and others, we will see some consolidation down to more standardized approaches, both to terminology and definitions, to be able to provide a clearer, more transparent regulatory regime to support the growth of what I've been talking about in digital assets. So I'd like to thank you for your time, and I'd like to hand over to the facilitator and the next speaker. So thank you for your attention.
Thank you very much, Keith. And Damola, please go ahead.
Thank you so much, Keith. Very, very, very interesting. There's quite a lot to digest from what you said. And I think without much ado, I think we should just go right next to the next speaker. It gives me great honor to welcome Mr. Jomale to also give us his thoughts and also shed more light on where are the opportunities, what are his thinking around what's the market looking like. So I think I'll just hand over straight to Mr. Jomale so that he can give us his thoughts on what Keith has said and other things he may wish to add to it. And we will now also hear from our dear regulators and hear their thoughts on some of the concerns. Anywhere there's an opportunity, there's obviously risk, and that's why they are there to protect investors, and they will be shedding more light on this as we go through. So, Mr. Jomale, over to you, sir.
Okay, so I'm still struggling with some of the numbers that have been thrown at us. Even the saving alone, 3 to 5 billion saving in AML, that's significant enough and enough reason for us to start thinking about it. And then you think of how large and how slow our private equity market moves. Again, massive potential there. I mean, there are a lot of things for us to pick up from. I think as time goes on, we'll be taking them one by one. I think it's great that we have a huge community here listening in, and I'm sure they'll continue to grow. But maybe we should hear from the regulator first and let us hear their thinking on how the world is going. I think it's fairly clear that the world is moving very quickly towards this and embracing it. And I'm sure Nigeria is not going to be left behind. So Mr. Abbas, you're very welcome. We'd love to hear from you.
Thank you very much, Mr. Jomale. And thanks, Kate, again for the presentation. Quite exciting and very well taught presentation. I think before I even respond, let me just thank the organizers for giving us this opportunity, inviting us to speak in this kind of forum. The SEC is really following this development with keen interest. Remember in 2020, the Commission issued a kind of circular trying to even classify digital asset. And that is really because we really feel it's an area that we really need to pay attention as regulators. Try to classify, classification of digital asset is one of the steps that we took in 2020. The whole idea is to see that before you even allow this thing to try, what are the concerns and what do you need to do as a regulator? You need to understand the concept and then put in the right regulation in place. So the essence of that publication as at that time was actually to inform the market about the thinking or the position of the SEC with respect to the digital asset or virtual asset, as the case may be. So we issued that circular. And the thinking is that after that circular, we should now be thinking about how do we now try to even regulate this kind of instruments or securities. So first of all, you classify the digital asset. If it is going to be issued as a security, the SEC come up with a position to say, that would be an area that the SEC would be interested in regulation. So that is really the starting point. And the way we approach this, we have 10-year master plan. And we now realize that even the master plan, we need to review that master plan to accommodate the new trend, which is the fintech trend that is actually taking place in the market, which has not been highlighted before when we did the initial master plan. So the SEC actually recognized that fact. We also intend, and that is what we have been doing, to try to even see, we carry other regulators along, because it's not only the SEC per se that has a role to play. We recognize the need to carry other regulators, state regulators like central bank and other key regulators, in this journey, so that at least all of us will be on the same page in terms of what we need to put in place to now allow this market to thrive. There are a lot of potential, and there's no doubt about that. It may interest audience to note that the SEC, even on its own, set up a dedicated division called FinTech Division. And what are we doing in that division? What that division is doing is really, first of all, do a kind of assessment of all these fintechs. If it falls within the confine of the capital market purview, we now begin to see, okay, this is an element or an aspect that we need to regulate. The question is, how do you go about the regulation? Do you need to come up with a sandbox regime or regulatory incubation strategy for the first time? Or do you need to go into full-blown issuing a kind of regulation? So these are some of the areas that we're actually looking at. For the digital asset in particular, we are thinking about even coming up with regulation with respect to the issuance, the offering, the digital asset service providers, and even the platform and the custodian. I think Kate touched on that one. So just to give a kind of flavor to the audience, the SEC is really committed and is very keen about developing this as a segment of the market, simply because we felt strongly that we need to really give a kind of protection to our investing public that are interested to invest in this field. That is really our own focus as SEC. We have a lot of inquiries, proposals that market operators have been sending to the SEC. We are actually looking at that with a view to come up with something that we think is robust. They're taking into cognizance our own particular situation as a market, and then incorporating the concern or the issues raised by other regulators, so that we can really be able to have a model market that we can be able to say, okay, let's start on this platform. And then gradually we can be able to now be moving from the issuance stage, even this kind of issuance, whether it's going to be asset-backed securities token or a kind of non-asset-backed crypto issuances, as the case may be. So this is really our thought. And I think these are some of the things that I feel we should share with the audience as part of the focus or strategic focus of the SEC. And all this that I've been talking about is actually in line with our 10-year master plan, which we have just reviewed. Thank you.
Thank you so much, Mr. Commissioner. It's really been very, very exciting. I'm sure the investing public is quite excited to hear that our regulators are ahead of the curve, and which is something that is very commendable on the part of you and your team and all the leadership in the SEC. So, audience, I'd like to thank you for your attention. The floor is open to start taking comments and questions. So if you have questions, please post them in the chat box, and then we can have them directed to our esteemed panelists. And we have the privilege of Mr. Keith being here. We have the privilege of Mr. Abdulkader Abbas being here and Mr. Ajomale. So I think I will start with my questions pending when other questions come in. So Mr. Keith's presentation has thrown up quite a lot of comments and issues, particularly one is around cross-border trades and issuances. So with the advent of tokenization, and this question is for all members of the panel, so how does this jurisdiction matter? And to what extent is SEC going to be having handshakes with other regulations around the world with respect to issuances? So I think I'll take the perspective from both the regulator's point of view on how that affects cross-border regulation. And then I'll also have Mr. Keith talk to us around how this affects trade around the world, particularly because of the African Free Trade Agreement that is coming into effect soon, so that border jurisdictions will no longer matter on how issuances are done. And then Mr. Jumali can tell us what kind of collaborations can happen within markets when it comes to this kind of cross-border trades. Thank you. So, like the famous saying, who like to bail the cat?
Okay, let me dive into that, if I may. I mean, I think it's quite interesting at the moment. What I'm seeing is a lot of the traditional financial world is still respecting the traditional borders in many respects. So if we look at the example I quoted of the Swiss Digital Exchange, the activity is largely within the Swiss borders in terms of the initial interest. But in the European example, there's now an open corridor between the Swiss exchange and the London Stock Exchange, for example, post-Brexit. So I think we'll see certainly more cross-border activity as the initial home market value and benefit has been delivered. So I think there'll be an element like that. But this contrasts completely with what's going on, and I know that's not the focus of this discussion, but what's going on within decentralized finance in the crypto world, which is essentially borderless, other than where there's specific regulations in specific jurisdictions that may stop that happening. So in some respects, we have two extremes: something which is respecting national borders and moving across borders as and when the regulatory regimes and other initiatives facilitate that, versus what's happening on the Wild West, if you like, which is in many respects borderless. I think this is also benefiting from, if we're talking about tokenization, a key element of that is how is the cash leg of transactions tokenized. And there we have multiple initiatives going on between central banks, as you're familiar with, I'm sure. For example, the MCBDC initiative that the BIS is working on together with the Central Bank of the UAE, the Bank of Thailand, the Hong Kong Monetary Authority, and the People's Bank of China. So this is facilitating how interoperability can happen between CBDCs in those 4 jurisdictions. And I think this is another trend that we'll see continually, facilitated in part by the BIS, to facilitate consistency and commonality around cash tokenization in terms of fiat, in terms of CBDC, alongside what FMIs may be doing as far as tokenization of securities and other assets are concerned. So I'll stop there, but I think that's where the landscape looks like from a more global perspective.
Thank you very much, Mr. Key. Two extremes, like you say. So I think I'd like to hear from the regulators, what kind of handshake do we need to put in place? Because the whole idea is Nigeria, one thing about the Nigerian economy is last year, over $17 billion came from international remittances. And if you look at that in context and put that in context to the investing community, tokenization will allow for more of this kind of transactions to happen. So what kind of handshake do you think will be required from a regulation point of view? And how do we begin to manage some of this limited border arrangement that will eventually become cross-border arrangements? Sure.
Okay. Thank you. So I think from the SEC's perspective, the bottom line is to be able to come up with a kind of a regulation that can be able to fit into the structure of these kind of transactions. We have a lot of, you may have a lot of cross-border, issuances or cross-border transactions of this nature. And that is why we felt strongly as the SEC, the first thing that we need to do is to now try to see and study the kind of, the structure of this transaction, try to come up with a kind of regulation or rules and interface with other regulators, especially the central bank in this case. We need to really have a kind of handshake to be able to now come up with a model that can work and that can work for us, as a market. There may be some peculiarities in each jurisdiction, and we are studying other jurisdictions to see there are kind of handshake between, let's say, the security regulator and the central bank, for instance. So these are some of the things that we're really looking at to put in place. Once you put those kind of safety valves in place, you create a kind of the desired comfort or trust that the market can be able to thrive on. So that is really what we are looking at in terms of the approach to, to have this kind of interface, because interaction is key. And again, try to even model and benchmark against other, jurisdictions that have actually been doing this. So that is another key issue that we try to look at. And once we get that one, and we get it, and we get other stakeholders, even in our market, providing their own insight into the proposed framework, I believe by the time when we have that framework, it will serve the purpose that everybody will be happy with. That's really the approach that we're taking.
Thank you very, very much, Mr. Abbas. Very commendable actions and efforts. We are confident under your leadership and the leadership of SEC, we should see these things come to life in the Nigerian market. Mr. Ajamale, your thoughts on this, please.
I look at markets in terms of the two major stakeholders in addition to the regulator, which is the issuers and the investors. Taking the West African region, then the African region, taking into cognizance the African Continental Free Trade Agreement, jurisdictions are converging in some form or another. And those jurisdictions converging would mean investors converging, it would mean issuers converging. Again, markets, as we're going now with digitalization, markets are becoming more and more virtual. So you would, rather than you seeing a physical exchange in one place, you would have the instruments rather being sent across different regions. A lot depends on foreign exchange agreements and restrictions. A lot would depend on the incorporation of companies and incorporation of instruments. But I guess as soon as the various SECs, the various commissions of each jurisdiction, as soon as they start coming together, then you can start seeing more cross-border listings. Again, by the time the central banks of the various regions or the various jurisdictions start coming together as well, you would start seeing exchange permissions, so to speak, where you can actually exchange into another currency in order to invest in a particular instrument. So I can see a convergence coming. I can see this making it easier for you to invest in, say, a Moroccan instrument, or for Botswanan to invest in Nigeria. So it's all good news all around. Again, because digitalization takes away a lot of settlement risk, a lot of counterparty risk, I think it'll be easier to get in and out of investments as well.
Thank you very, very much. The questions are pouring in, and I think I'll take my first question down to our dear regulators on the call on this webinar. And the question goes thus. First is to commend SEC for issuing the draft rules on offering and custody of digital assets, excuse me, which they exposed to the market last week. But the question is, trading of digital assets, the rule seems to be silent on that. What are your thoughts on this, sir?
Right. Okay. I think if I could remember, I think we have touched on virtually all aspects of the framework, including the realization of the proposed draft rules or realization of even the digital exchange. So if I could remember that draft that is being referred to, even though it's still a work in progress, but it has virtually captured all the areas that we think need to be captured. However, one of the beauty of the approach that we're adopting in terms of rules making is to engage the market, engage the stakeholders. If there are gaps in what has been actually circulated, the idea is to now be able to now bridge that gap by getting those comments. We don't claim that we know it all, we sit here and we know it all, no. And that is the essence of now having this kind of, a forum or circulating any draft rule for that matter. To the best of my thinking or my understanding, based on what we have issued, I think it has largely covered both, an end-to-end solution in terms of what we are looking at in the entire, ecosystem. But as I said, this is something that we can accommodate, and we welcome any idea that we think are the gaps that we need to be breached. I think that's what I would say for now.
Thank you, sir. That's exactly what we expect, and and this is even well ahead of our expectations because everything is work in progress. So the fact that it's The regulators are saying, let us have your ideas, let us have your thoughts. We don't know it all. We want to work with the community to create what works for everybody. Thank you so much for putting that across. I think the question also was trying to tie up around the issue of trading and settlements, how that process would work, how would it affect issues around T+3 coming to T+0, and so on and so forth. So I think these are things that would improve over time, except Mr. Abbas wants to add anything to it. I think some of these things are things that are work in progress. That's what I can gather from that feedback.
Absolutely. Absolutely.
Thank you. Yeah. Thank you, sir. So I think I'll put this to Keith. And so let's talk about other markets. You know, what has been the regulator's role, and what do you think should be the core focus compared to, I mean, these markets are already, they've gone live already. They started doing very innovative things. And then what do you think should be the regulator's direction where they can have their focus on, particularly here in Nigeria? You know, where are the areas, the key touch points that you think we need to get on right away?
Okay. I mean, one example, I mean, I've talked about Switzerland a little earlier, SDX, and the regulator there, the FNMA. Obviously, we're one of the first movers, I would suggest, in terms of understanding what the risks and structure of digital asset markets might look like, and what are the appropriate regulatory elements to put in place in support of that. And one of the, I can't speak for them, obviously, but one of the motivations, I would imagine, is being able to attract more investment and more trading activity into the Swiss markets, because they have that benign and supportive approach. And we can obviously see that both in the traditional financial world, I think, as well as in the crypto world, because the approach they've taken has supported all aspects of digital assets. So I think that's one key element. Obviously, there's a need, I think, for regulators to understand the technology, understand where the risks are. Obviously, it's not a question of regulating the technology, it's a question of regulating the business that is being implemented through the technology itself. But it does bring new risks and new obligations to the fore, I think, and therefore it's kind of incumbent on regulators to understand what those are in terms of being able to put in place the appropriate framework. So you may be familiar with, in Europe, for example, MiCA is the market infrastructure for crypto assets, more on the crypto world. But this is another example of where there's a significant potential benefit in terms of attracting new types of digital assets activities into the jurisdiction by having clarity and transparency as far as the regulation is concerned. You know, satisfying the key obligations that a regulator may have in terms of consumer protection, stable and ordered markets, etc. So I think those are kind of the comments I'd make to that question.
Excellent, thanks, Kit. And just before I leave you, Kit, and I jump next to Mr. Jamali, you talked about hybrid, you know, the hybrid issuances. You know, when you talk about hybrid, there can be some issues around arbitrage. So, because one technology is ahead of the other. What are your thoughts around this? And then I'll also like to get Mr. Abbas, and then I'll come straight to Mr. Jamali on thoughts around that. So, arbitrage when it comes to the hybrid issuances.
That's a good question. I mean, clearly the asset, in the example I quoted, the asset is essentially the same. So it has the same characteristics in that respect. But the demand for the asset may be different because, you know, certain investors may have a particular attraction for holding the digital version of that bond as opposed to the traditional version of that bond. And it may have potential differences in terms of the way that, for example, asset servicing takes place, etc. So this only happened, I think, in November of last year. So exactly what the divergence is at the moment, I'm not sure. So I wouldn't expect there to be significant arbitrage activity around it, but it's a very interesting question, and it's one I need to do a bit more digging on.
Yeah, just before I leave you and I go straight to Mr. Bass, I mean, it was quite interesting to hear that the tokenized digital asset, the digital issuances was higher subscribed than the traditional. So is this an investor mindset, or was this something that was prepared beforehand or is it because of the novelty of the technology? What could be the drive behind this?
Whether it was prepared beforehand, I don't really know, can't really comment on that. I mean, obviously it might be the case, but one taking it on face value, I think it's simply because that investors see that this is those particular investors see that this is the future, that there are going to be significant benefits in the longer term, that they want STX to be a successful venture because they recognize this bond issuance is just the first step, that there will be further movements, both in terms of tokenizing bonds, but also potentially equity shares, Novartis and Nestle, etc., in terms of big Swiss enterprises, and also moving into other forms of digital assets. So if that is going to be good for the market, it's going to reduce cost, it's going to reduce friction, it's going to increase the investor base, then it is a good thing for investors. And if they want to support that, it's, this is a key way of being able to do it in that respect. So I think it may ever be that kind of mature view from an investor perspective, or it may be around the shorter term novelty of it. But either way, I think it's quite, interesting dynamic to have done it in that kind of hybrid fashion.
Oh, good. Thank you so much. And I'll go straight to our dear commissioner, because obviously everybody in the regulated space knows they don't want a rat of SEC when it comes to the rules. So when you talk about hybrid, I mean, what are your thoughts on that? Are we at the point where we can say hybrid is good to go? Let's test the water with hybrid. And what are your thoughts on it?
Okay. Thank you, Demola. Sorry, just to correct you, I told you my commissioner is not on the call.
Oh, sorry about that.
Yeah. Thank you. So, so just to give our perspective in terms of the hybrid, what we try to do, or our own thinking, is to really see that how do we really make it simple for now. Try to now, come up with a model or a structure that everybody would be comfortable with, both the regulators, the investing public. The blockchain is just an enabler, for instance. But if you look at the structure, you need to agree on the structure. As a regulator, you don't want to endorse on the structure that you two are not comfortable with. So in terms of looking at the hybrid structure, I think it's still something that we could consider as we go along, as the market develops. And that is why I made mention about the approach to regulation. One approach is, do you even come up with this kind of structure, of sandbox structure or regulatory incubator? Whatever idea you have, we now say, okay, let's accommodate it for a limited access only for some time before we now allow it to be full-blown approach that will now be taken by everybody. Now, but at that time, what you are trying to do is, even you as a regulator, you are trying to understand and to see how you can be able to tweak certain issues in the regulation to give a kind of comfort. So whether you do hybrid or you come up with a plain structured transaction, for instance, our own take is, let's see how we can be able to come up with something simple at the initial stage. And then with time, we can be able to now be making good progress at the time as the market develops. I think we try to see what happens in other markets as well, to see that, look, they try to accommodate this kind of issuances or this kind of, offering, in a step-by-step, way, so that it will not draw the market. But at the same time, you are not killing the innovation, because there are a lot of things that are going on. And that is why, as a regulator, you have to really go along with the trend in the market. Sometimes you may even allow things to start, then you come up with certain kind of regulation to now breach the concern or the risks that you think you need to address. So that should be that is our our take on that, whether it is going to be hybrid or a plain structure. Thank you.
Thank you, Mr. Abbas. I really, really appreciate that feedback. That's forward thinking. That shows a regulator that knows what they are doing. So I think I'll go right next to the next question. And this is for all the members of the panel, but I'll start with Mr. Adjumale on this one. I mean, how floating a digital securities exchange platform in a jurisdiction like Nigeria serve as an attraction for major institutional and private investors, because there's just convergence of capital that we've seen it proven on how digital assets have proven to be ahead of traditional markets. So if we have that in a jurisdiction like Nigeria, what do you think can happen to our foreign, in terms of inflows of FDIs and so on and so forth?
So First of all, I think any form of tokenization or digitalization would expand the scope of the market, would expand access to the market. It would fractionalize, as Keith said earlier on, it will fractionalize the instrument. I saw one instrument that Keith referred to that was broken down into $1,000 pieces. If you take that into the Nigerian context, we're talking about 1,000 Naira instruments that are tokens. Imagine buying a 1,000 Naira token in the Nigerian ports, for example. It increases the scope of what can be tokenized and what can be invested in. Long-term investments as well, especially. Again, what it would do is it would free up a lot of private equity funds that have been locked down as well. They can be made open to the public as well. So what it then does in terms of inflows is once you see an economy that has liquidity, you will be more interested in getting in there. It's only when if the economy or the environment is seen to be illiquid, then you would think twice about getting in, or you would consider the risk of you being able to consider liquidity risk. So I think by adopting this kind of market, as we start moving towards it, we will find that there will be more players interested in coming in for a penny, in for a pound, maybe a small start to start with, and then later on we'll be seeing some larger issuances. And that leads to another thing that was mentioned by Mr. Abbas earlier on about keeping it simple to start with rather than going the full hybrid, way. That actually appeals to me quite a lot because that way you can see there's very little comparison of the same instrument. There's less confusion as to which one am I going to invest in. You've got a single instrument that you're investing in and you're holding it to see what happens to it and the liquidity that comes off. So maybe that's the best way to go. It's early days yet. The market is being formed. Again, this is one of the first sessions we're going to hold that discusses some of the issues around tokenization, around blockchain, around digitalizing exchanges. And I'm sure the conversation will go on for a while.
Thank you very, very much. The regulator says, let's start with some limited issuances, and then we understand what we're doing better and give an all clear notice so that the market can be transformed. I'll go straight to Mr. Keith now. A digital securities exchange, how much influence do you think it would have on an FDI of a country, particularly when it comes to its competitiveness? In Africa, for example, where you have the Africa Free Trade Zone Agreement, where trade is now becoming borderless. So what are your thoughts on that from that perspective?
Just to add to what Bola said, I think, and what I said earlier, I think the potential is to find not only conventional assets and tokenization and the benefits that brings, as we've talked about before, but also to create and facilitate new assets and new business models that might be able to facilitate that. So basically innovation in that respect, especially given commodities that I touched on very briefly and others that may be something that the countries we're talking about are exporting. There's nothing to stop commodities to be tokenized as well, to create abilities around that. So there's a lot of potential innovation that can also support new business models that are taking advantage of the cross-border opportunities that exist in free trade zones, for instance.
Thank you so much for that feedback. It's getting more interesting. We still have room for some questions, but while we're still waiting for some to pop in, I'll take just one question from a regulator's view. The e-Naira and digital assets, convergence, what are your thoughts? Because a lot of countries are issuing CBDCs, but there seems to be no clear bridge between how they will interact with the capital markets. What are your thoughts on this, sir?
Okay, thanks. Thanks, Demola. So the e-Naira is actually an asset, digital asset that is actually backed by the authorities, which is like in this case the central bank. You may have other assets that are digital assets that are not actually asset backed, as I said. Like the crypto that are not just actually asset backed, for instance. So I think in my own view, these are concepts that I think we need to really study to understand where the areas of convergence, where are the issues really between the two concepts. When you issue a kind of tokenized asset based on an asset that you back it based on, you back it based on an asset, for instance, and you are going to issue it to the public, for instance, we are saying that from the SEC's perspective that it's something that we need to be interested and we need to really find a way to regulate. For the in-era, which is the e-wallet that's going to be issued, and it's actually mimic the conventional, the currency that you have, let's say, it's equating to what you have, let's say, in your bank account, for instance. When have this kind of concept or this kind of issues, how do you really have a kind of convergence? What are the issues that we need to really study or to understand between the two concepts? Are there areas of concern that we need to pay attention to as a regulator, as capital market regulator, for instance, or as central bank? Or is there anything that will have a kind of impact on financial system stability in that regard? So I think these are some of the things, in my view, that we need to still try to get it right, or to understand and to see what are the areas of overlap or convergence. Some will say that, oh, look, these are maybe two different concepts. This is in-era that is like meant to serve a particular objective. This is a tokenized issuance that is actually meant to serve a different perspective or objective, for instance. So I think all these issues are issues that need to be carefully analyzed before we can be able to have a kind of landing or a position. As I said, that is the essence of having this kind of interaction and having interaction with other regulators as well. Let's all of us understand the concept, come up with something that we think can be able to satisfy everybody in the value chain.
Thank you so much, sir. Just before I let you off the hook, I'm not putting you on the spot, but what do you think, what kind of timelines do you think the regulator would look at this entire process and say, likely very soon, these are the things that would happen in the markets?
Thank you, Bidewola. I think you have even answered the question when you say very soon. That's really what we will say as a regulator. And that is, we are really very keen about this. And that is why we are really being engaged in the market, coming up with all these kind of pieces of draft legislation. It is our hope that very soon, really we can be able to have a kind of landing towards the framework that we're looking at. And by the time when we have that one, I think we can be able to see some good traction. At the same time, as we are going along, we are still studying the concept and the structures to be able to fine-tune certain things. So to answer you is really, we are very keen about it, we are very interested, and that is why we will be issuing guidelines and regulation. And very soon we hope to have something in place.
Thank you very much, sir. The regulators are keen and they are looking to making this happen as soon as you think. All right, Mr. Kidd, just the last one before I let you go. CBDCs and digital exchange, convergence points. Your thoughts on this, please.
Yes, I mentioned Project Helvetia a little earlier, which again, sticking to Switzerland as an effort to be able to understand how, in this case, securities transactions can be facilitated by CBDC. Here we're really talking about wholesale CBDC as opposed to retail CBDC. But essentially that's going to be the most effective way, obviously, of being able to execute transactions using central bank money. In the case of a wholesale CBDC, atomic settlement, so basically immediate settlement with no settlement risk, because the transaction happens if and only if both sides of the transaction are there instantaneously committed to the ledger in that respect. So I've mentioned that will be a key focus, I think, in terms of where various central banks' moves are on wholesale CBDC. And there's been obviously significant initiatives going around globally at the moment, in part facilitated by the BIS in that respect. And I also mentioned the Finality initiative, which is a synthetic CBDC. So we're taking a different approach where the call is against the commercial bank involved in the transaction, but using their accounts at the central bank rather than the call being against the central bank, as in the case of a wholesale CBDC. But again, being able to make a significant reduction in cost and settlement risk as a result of what they're offering. So I think just looking at the various initiatives taking place in the Bank of Thailand, MAS in Singapore, Bank of Canada, what the Finality central banks are doing, etc. We're seeing a significant trend to facilitate the cash leg of such transactions. But what happens on the securities leg or the tokenized asset leg, that's largely down to what the SECs of this world and the FMIs of this world wish to facilitate. And obviously it's the working of both together, such as in Project Avatia, which will make the real difference in facilitating that, I think.
Thank you so much, Mr. Kidd. So I take it that the capital markets can improve the demand for CBDC and the use of CBDC assets, and indirectly or directly influence the kind of foreign trades and inflow of foreign direct investments in the country. So the capital market is really key to all of this and very key to transformation. So we've come to the end of this very exciting and engaging webinar. And to all our guests, we're thankful for your time. So to our panelists, I think parting words, your thoughts on, final words on this. I think I'll start with the capital market operator, then I'll go straight to our guest speaker. And I always like to have the regulator come in at the end because they are the ones that put the icing on the cake. So Mr. Ajumale, your thoughts on this, final words to the market.
What the market is that technology is advancing and it's enabling us to do more and more things and creating more and more exciting models. I remember when we used to trade with paper certificates. So we've come a long way from that, and there's quite a long way to go. We're just starting, and there are very exciting days ahead, and there's a lot of knowledge to be built as well. What we are going to do next, and because we can see the gap in what we do want to know, we will be running this series, as I started off saying. We will be running a series. We'll probably be looking a bit at risk. We'll be looking a lot at settlement and so on going forward in this series. So this is the first of one. We would like everyone's opinions as well on it. And we'll try and steer the conversation to where there's demand. But regarding today's session, Keith, I can only say thank you very much. And Mr. Abbas, I can only say thank you very, very much as well. So I'll stop at that point.
All right, thank you very much for that, Mr. Ajumale. And then I'll just take it real quickly. You talked about ESG and capital markets. Final words on that, and you can slide that in between as well. Thank you.
Just on ESG, I mean, that's one of the areas, I think, where there's obviously a significant investor focus, a significant regulatory focus, federal government focus at the moment. And it's also an area of intense innovation. So I'm seeing multiple startups and fintechs that are working to be able to tokenize ESG assets, for example, at the moment, to provide better ways of being able to understand the ESG characteristics of particular investments, etc. And what we're talking about here, I think, just in the case of green bond issuance, for instance, where again the BIS has been very active in facilitating POCs in that area, in order to be able to take advantage of that, to provide more opportunities for ESG investment, to be able to do the right thing for the planet, it does require the right market infrastructure and the right regulatory treatment to be in place to be able to support that. And therefore, everything we're talking about in this webinar, I think, will also facilitate and support those changes, because at that level, it's just another asset class with different attributes and characteristics, but it does require that digitalization to be able to facilitate it in an effective market way.
Thank you so much. We believe that the NESD will be home to tokenized ESG instruments in a very short time. All right, good. So now to our dear regulator, Mr. Abbas, your thoughts. Congratulations on the FinTech division. What are your thoughts around the future of this market and what should we expect next?
Thank you, Demola. I think great potential of the market, leveraging on FinTech. And that is why we really try to see how we can go along with the market, with the trend. I think it is really going to be a kind of collective effort, both the regulators, the stakeholders, and market operators to be able to really make a good difference. Let's keep the discussion going, and let's see how we can make good traction as we go along. It's a market that we need to really pay attention to, and we need to see how we can really develop it in such a way that it will not cause any kind of systemic issue. And that is why you need to really focus on regulation. Once you get the regulation right, I believe the market will thrive on that, and you will see a lot of activities. As I said, this is a market with great potential. This is a segment that has great potential. And once you get that regulation, even the tokenization of the ESG asset that we're talking about is something that can galvanize and create a lot of activities in the market. So I think for me, let's continue with the conversation, let's continue with the engagement, and let's see if there's any area that we need to cover. Feel free to reach out to us. We are open for more discussion, more collaboration in this regard. Thank you very much.
Thank you very much, sir. Collaboration is the word, and the regulators have said it all, that we are willing to make this happen, and we want the markets to evolve. So on that note, we've come to the end of this very interesting and engaging webinar. I'd like to thank you all for your time, and particularly our audience. We'd love to hear from you. Please feel free to send in more questions. We'll try and get them to all the panelists as soon as we can, and we will give you good feedback within a very short period. So I'd like to call in my colleague, Chinwe, who will be giving us the closing remarks on this call. Thank you so much.
Hi, good afternoon, everyone. I'm sure we have a lot of questions, just the same way my head is filled with questions right now on this topic. So, but I quickly want to chip in that if you have any question or area or concern that you want us to address in the coming series, please feel free to reach out to us on any of our contact points, or you could easily send an email to marketoperations@nasdng.com. That way we could look at where your pinpoint areas are and then focus on them in the next series that we'll be taking on. So I would want to say it's an honor to be amongst so much accomplished time with us discussing digitizing securities. As our ND has said earlier, today is just the first of the series, and we hope that we'll be able to address various perspectives and get answers to a lot of questions that I'm sure we all have on blockchain, on the use of blockchain and digital securities. I would like to think that every one of us have had a good and highly productive time in this 1 hour or 30 minutes that we spent together. So as a closing remark, I would like to thank our speaker, SEC, represented by Mr. Abbas. Thank you very much for coming. Mr. Keith, your presentation was so insightful and so full of learning points, and I'm sure we still have to go back and digest. Thank you so much. Mr. Damola, you're a very good moderator. Thank you so much. And especially to our CEOs of participating institutions, all the corporate bodies and everyone who has come to join us. We say thank you. Have a lovely day and see you by the next series. Thank you.
Thank you.
Thank you so much, Chinwe. I think the issue around presentations, we will talk to Keith to see if we have his permission to share this, and then we'll get it across to as many people that have asked for it already. So on that note, thank you so much. We're really grateful. Thank you so much for your time, Mr. Bass, Mr. Keith, Mr. Ajomole. We're extremely grateful for your time and presence here, and we wish you all a fantastic afternoon.
Thank you.
Thank you.